Pretty much anyone who wants to participate in the housing market, either as an investor or as a homeowner, is looking for affordability right now. Affordability is actually at a 40-year low, and with housing prices shooting up over the last couple of years, it's harder and harder to find. But luckily, there are plenty of markets throughout the US that are relatively affordable. But for investors, it's important to remember that affordability doesn't mean investability. Those are two different things. In today's video, I'm actually going to examine markets that offer a little bit of both. Markets that are relatively affordable, even in today's market, but still have the strong underlying fundamentals that make them investable. Sometimes markets are cheap because there's declining population or rent growth is stagnant and they're just not as desirable places for someone like me who's a buy and hold investor to want to buy property. So instead, we're gonna look for places that have balance. And I'm gonna show you in this video how to identify those types of markets. And I'm actually gonna share with you 3 markets that I personally like that offer affordable prices, but still have good fundamentals. So before we jump into those 3 markets, I think we need to identify what we mean by affordable and what we mean by investable. Let's start with affordable or less expensive markets. So right now, as of August 2024, the median home price in the US is around $420,000. That's pretty crazy. It's way higher than it was back in 2019, and it's a lot of money. So I'm going to look for markets that are below the national average. And this day and age, you can't really find markets where the median is below 200,000, but I'm going to set an upper limit for my criteria here at 300,000. So that's 75% of the median or less. And as you'll see throughout this video, there are plenty of markets where you can still get in under 300,000. Now, I know that mark of $300,000 is not cheap for everyone. That is still a ton of money. But in this video, and when you're thinking about affordability in the housing market, it's important to remember that it's all relative, right? I'm saying $300,000 is more affordable because it's considerably less than what the average is throughout the country. So that's what I'm looking for when I look for affordable. The question about what we mean when we mean investable, that's a little bit more nuanced and subjective and takes a little bit more data analysis to figure out which markets are the most investable. But before we get into that, you should know that if you want to get deals right now, there's actually only one data source that you need, and that's PropStream. PropStream helps investors find motivated sellers in any market across the country with hundreds of different filters. You can search both on and off market for properties. You can run comps, get in touch with sellers using built-in marketing tools, and analyze deals to your heart's desire. When inventory is tough to come by, like it is right now, PropStream is the key to finding your next property. Check them out at propstream.com/BP. But of course, if you do want to analyze markets and find deals on your own, I'm going to share with you some metrics that I personally look at to figure out what is quote unquote investable. And again, this is a subjective analysis, but I'm just going to tell you what I do in my own investing. So number one thing when I'm screening markets to do a deeper dive on is I always want to see that there's a good opportunity for cash flow. Now, I don't weigh cash flow super high. Some people only care about cash flow. I look for a balance, but I don't buy deals that aren't cash flow positive or at least break even using very conservative underwriting. And the way I do that is using a metric called rent to price ratio. It just compares the price of a house for how much rent that house can generate. And I look for something that's at least 0.6 or higher. I think those markets tend to offer cash flow that you can generally find on the MLS if you're patient. The second thing I look for are good housing market dynamics. So I want to see a good balance between a buyer's market and a seller's market. If you go too far in either direction, it can be a bit tough. If you're in a really strong buyer's market, that might sound good, but it's usually because there's not a lot of demand in that city, and that can mean stagnant home prices or declining home prices in certain markets. On the other end of the spectrum, if you're a strong seller's market, that means prices could be going up, but you are probably in a very competitive market where you're going to have to bid over asking price. You're not going to get a lot of time to make decisions. And so I usually look for places that have, more balanced housing market dynamics, which you can measure in a couple of different ways: inventory, months of supply, Personally, I like using a metric called days on market, which just basically measures how much time it takes for the average property once it hits the market to sell or to go under contract, excuse me. And I look for something around 45 or 50. During the pandemic, this dropped down to 20, 25. Some markets are up to 70, 80, 100, taking months to sell. And that was normal pre-pandemic. Right now, I think normal, quote unquote, is something in that 45 to 60 range. And so I'm going to target markets that do that. Next, I want to see positive price growth. I don't want to invest in a market that's declining. You can, but you have to be a little bit more careful. But I'm going to avoid those for this purposes of this video. And I want to see positive rent growth. Last things I look for are more generalized economic indicators like a solid economy, which can be measured by job rate or unemployment rate and comparing that to the national average. And then I also look at population growth because I want to know that demand is likely to be growing in the near future. And so when I look at all of these things combined, I look at affordability, so under 300,000, and those different metrics for investability that I just mentioned, which again are cash flow, housing market dynamics, price and rent growth, population growth, and a solid economy. I came up with 3 markets that I really like. These are not the only markets that fit these criteria. I'm just choosing 3 for purposes of this video so I can talk about them and not go into this long list and show you how you can do this analysis for yourself. The 3 markets are, number 1, El Paso, Texas. It has a median home price of just $219,000. That is close to just half of the national median. Meanwhile, prices are up 5%, which is about average in that market. We see a rent to price ratio of 0.72%, which is great. It's got a unemployment rate, which is right in line with the national average. Population is growing. And although the median days on market are a little high, they're about 70, I'd still say that's in the realm of reason. And this, to me, represents the prototype of what we're talking about today. This is a relatively cheap market, but has pretty strong fundamentals. It's a place that I would recommend people learn a bit more about. The second one is Fayetteville, North Carolina. This one we have a median home price of $247,000, so it's a bit more expensive, but it's also seeing strong price growth over 6% and rent growth of almost 4%, which is faster than inflation. Rent to price ratio is right on line at 0.6. It has a really strong wage growth at 2.4%. We see days on market at 54%. So that's 54 days, excuse me. So that's right in line with what we're talking about. Last one is Oklahoma City, where our median home price is $238,000. And I like this market a lot. It has good potential. The job growth is really good. Unemployment rate is really low. It has a very strong economy. It also has great median days on market, which is 4.9%. The population growth is great at 0.75%. So it really has a lot of the boxes that personally I would look for if I was trying to identify a relatively cheap market that had good fundamentals. Before we get out of here, I want to just take this from theory to actually showing you what these markets look like. I'm actually going to show you what a deal in one of these cities looks like. So I picked Oklahoma City, and if you guys are curious, I'm using the BiggerPockets deal finder. Kind of looks like other listing platforms, but it's built for investors here. And so basically what I can do, first and foremost, if I don't know much about this market, I can look at this forecast here and see which areas of Oklahoma City are forecast to grow the most. So right now I'm going to look at places that are sort of the darker color. So I'm seeing here in the Southwest or in the Northeast here, then I can see prices. And so I see that this price point over here, let's just go over here. This seems like it's an area that's likely to grow, and it has the price point we're looking for. So remember, we wanted 230,000. So I'm just going to click on these guys. I don't really know anything about these particular markets, but let's just pick this one here for 241,000. So this property is 180,000 less than the national average. And if you look at it, it looks pretty nice to me. I mean, I don't know this, but it has nice luxury vinyl plank floors. It looks like it's been recently renovated. I mean, this looks like a high quality property to me, just from the pictures. And I just wanted to show you that in these markets, 240 grand or these relatively less expensive markets. These are not necessarily rundown homes that need to be fully renovated and require a lot of work. Just looking at this specific example, for $240,000 in Oklahoma City, you can buy a really nice place. You can see that it would rent out for $1,753 here. You can learn all sorts of other information about these deals. But I just wanted to show you that these types of deals are possible, and it is still possible if you pick the right markets to find deals that are affordable in markets that have good fundamentals. Hopefully you can see that, but if you have any questions about this or any thoughts on which markets that are more affordable that you would invest in, make sure to put your thoughts in the comments below. For BiggerPockets, I'm Dave Meyer. Thanks for watching.